All right, is it a bailout? Did Ebby and Carney basically just say they're going to be buying 2,200 possible units? Let's dig into this one, because is this a bailout? Is this affordable housing? What exactly is happening, and how does it affect you, the consumer, in the Greater Vancouver area? All right, so let's dive into this, because I think this is important. First, we need to move back into the past and realize, where are we right now? What is going on? So if we look at the stats, there's well over 2,200 vacant units that are already built and many more coming in the Greater Vancouver. And that's not even including the Fraser Valley area. So as somebody that has owned a real estate brokerage, runs a real estate team, and also has a project marketing company, and this is something I'm very into with what is actually happening in the market. And I've had many calls from top CEOs and developers to discuss what's happening in the situation, who's going to be applicable to this, is this a bailout, what is going on? So I can tell you this. First and foremost, yes, some of our major developers, and I'm not going to say names because obviously a lot of this isn't public information, but companies that 100%, if you live in British Columbia and have ever looked at pre-sales or perhaps own a condo or townhouse, more than likely know their names. And these are companies that have hundreds, if not thousands of employees that are on the cusp of going bankrupt. Okay, so I'm not going to say names because at the end of the day, like I said, it's not public knowledge exactly, but trust me when I tell you, these are big names. And so what's happened here? So we need to look back the last, not even a decade, last 5 or 6 years, and understand what has brought us to this position, to this state, to this unparalleled. This, in many cases, especially on the new development side, is the equivalent of the United States in 2008, what we're facing both in BC, or I should say the Lower Mainland, and in many cases in Ontario or Toronto, even worse, right? So I just want to hold a disclaimer here in the fact that this is my opinion, but it comes from a lot of my experience and from the people I talk to on a daily basis in the business that I'm at. But also there's markets and areas that are still doing really well. Kamloops, Nanaimo, the outskirts of British Columbia, and these are not super far away. I shouldn't say we're not talking Fort Nelson type thing, but these areas are doing really well. We have agents doing 20 plus transactions a month, a lot of homes being sold. So the market all over British Columbia is a lot different. But this specific market, specifically the pre-sale market, the condo majority, but also townhouse market, has seen a massive hit, anywhere from 20%. I've seen condos selling 40% less than what they were in the peak of 2021. What brought us here? So first and foremost, we have to look at supply and demand. So what really happened here? If we look at the last dip of the condo era, it would be 2019. That's when the foreign buyers tax came in. That's later after that, we had legislation banning foreign buyers. We had an interest rate hike that went up to 4% plus in the 5-year fixed period. So we had a lot of developers that could not move properties. I remember in 2019 when I personally purchased a couple condos, we were seeing prices already at that time drop $75,000 from what they were the year before. And I'm talking about 2 bedrooms in Langley City. I personally bought a 2-bedroom in Langley for $419,000, brand new pre-sale. That would have been worth closer to $500,000. In the peak of 2021, it went up to $625,000. So in a 2-year period, it went from $419,000 to $625,000, a $200,000 jump, 50% increase in pricing. So you can see it was a little bit nuts on how all of this happened. So if we look at, it's always a supply and demand thing. Then we know obviously COVID came up. And because in 2019, the developers stopped building, it was one of our record low years for new applications and developments, we basically saw an inventory of an all-time low come around that 2021 year period, right? And what I mean by all-time low, a per capita all-time low. And then what happened? We had COVID. Obviously, the government went crazy and dropped the interest rates. And I know it's through Bank of Canada and so on and so forth. But basically, we found ourselves in this perfect storm. Low amounts of inventory, right? Almost free money. I have many clients that have 5-year fixed rates at 1.75% interest, historically low, and no condos to buy. They weren't able to go on trips because travel was more or less banned. You didn't have money or you had extra money to spend because there was government subsidy coming all over, free money getting thrown out. People were sitting at home. We saw a massive influx in both condo sales, homes, all across the board. And that's what I said, from 2019, my condo that I bought for $419 went all the way up to $625,000 in literally a 2-year period. So we can think a lot of the legislation that came in is what drove this massive demand. People were bored, people had extra money to spend, they couldn't go anywhere, might as well invest, go buy some condos. What ended up happening though, because there was such a small demand and because of everything started rocketing, obviously the developers took notice and started buying up everything, right? So where a lot of the units that we're seeing, obviously, right now in completion that have either fallen apart, people haven't completed on, or any of these things, were originally sold in that 2021 to 2022, 2023 time period, right? And so at that time, everybody was pre-approved. Obviously, prices only went up and nowhere else, right? And it became like this perfect, crazy storm. And during that time period, we saw an increase in everything. So not just land, not just the end use or the end sales price. Like I said, from that $419 to $625 at the end of 2021, people were buying pre-sales for. But along with that, because there was so much building, so many applications, so many things going on, so many transactions, that there was a limited amount of people to actually build those places. So what happened? Price of labor came up, bidding wars happened. So literally people were paying whatever they asked just to get the projects done. So we saw this influx of wages increase when it comes to construction, the influx of cost increase to construction. So in 2019, the average, just to give you guys an inside scoop here, the average townhome cost anywhere between $120 to $135 or $150 a square foot to build. Now we're seeing $250 a square foot to build. So you can see even the pricing has gone up, not 100%, but close to it on just the cost to actually build. So what ends up happening is, obviously now we're seeing the market has completely changed because obviously we have no outside foreign buyers coming. That's another video I'm going to touch on. That might be changing in 2027 because that's technically when the foreign buyers ban ends. I doubt they're going to completely end it. I'm sure there's going to be some changes and stipulations that they're going to still put into place. I have some ideas. I hope they will listen, but we'll go from there. I digress. Point is, now we have hundreds, if not thousands, actually I should be corrected, thousands of units that are completing or have completed that were originally purchased in 2021 and 2022. And so here's where the problem lies. Between that time period, interest rates went from 1.85 as high as 6% plus, because we've been trying to fight what 2021 and COVID originally created was this acceleration of basically the cost of everything, right? So we had inflation at exorbitant amounts, 6 or 7%. So the Bank of Canada's job is obviously to regulate that and bring it to around 2%, right? So now that we're close to that, our interest rates have gone up as high as 6 or 7% for a 5-year fixed. They're now hovering back around 4. But the problem is those people that originally were approved and thought their payments were going to be X amount, had X amount put down, etc., were banking on being able to rent it out at a certain price point to break even as an investment. Because that's something that a lot of people aren't talking about, is that majority of these pre-sales in Vancouver and majority of the pre-sales even in the Fraser Valley were purchased as investments, as potential rental properties. So this is where the problem comes from. So we have in all sales, in all markets, in all things, it's always the basics of supply and demand. So now that we have thousands of units available, and now that unfortunately nobody's going to be cash flowing on them because they're at a 4 or 5% interest rate versus what they originally thought was 1.85, we had a whole influx of these properties coming onto market. Not to mention the leftover units that the developers still have to close on and complete on because it's taken them so long to run through all of the different processes through the city, getting development permits, building permits, etc. This is a separate video altogether, but for those of you that don't realize, the average time from purchase to actually being able to sell, not completion, is between 2 to 4 years in the Greater Vancouver area, depending on the municipality. So imagine buying a property for $20 or $30 million and you can't even start selling them. I'm not talking about breaking ground or building them for 2 to 4 years. And the holding costs and all these things associated with it. Why is that? It's literally only one reason. It's the red tape associated with building and developing in British Columbia. We are one of the most difficult places throughout the entire North American globe, or North America and the globe, to get any kind of projects done. And that's why we're noticing a lot of our developers are actually moving either to Alberta or they're going down south where they can do the exact same process in 3 to 6 months, not 2 to 4 years. So we now have a tremendous amount of inventory. Obviously now all that inventory is competing with the rest of the inventory, right? And so here's where another problem arises. We have all this inventory, and let's just say our listings, which they are at an all-time high, go from 1,000 listings to 2,500 listings, right? So as we know, based on supply and demand, those 2,500 listings are probably, and we only have 1,500 buyers out there, let's just say, they're all competing for those buyers. So to be able to get those buyers, they're going to have to dramatically drop their pricing to fall into line where people are willing to pay for them or buy them. This is where problem number 2 comes in, is that the clients and people that actually want to complete on their pre-sales that they bought in 2021, when they actually purchase that place, and let's just say they bought it for sake of use, $700,000, now that $700,000 home is only worth $600,000 or $575,000 because of all the influx. Let's just say they're still willing to complete because they put $140,000 down. They're still willing to complete at that $700,000 price point. The problem is because they weren't fully approved, which 90% of them weren't fully approved at that time, now their bank or their lender is reappraising that property, and it's no longer $700,000, now it's $575,000, let's just say, right? Now their original down payment is not enough to cover the loss. So they have to come up with that additional loss as well. So they've already put out $140,000 as a down payment, thinking that's 20% on the $700,000, but now they have to come up with the $125,000 loss as well. So what ends up happening? The clients end up walking away, losing their deposits, right? Because they just cannot come up with that additional money. And so yes, they lose that deposit, they walk away, the developer keeps that deposit in most cases, but now there's more inventory to be competing with. So it's this cycle that continues to go on. Okay, so is this the developer's fault? Is this the government's fault? And this is just my personal opinion, it's a mix of both. Obviously, developers overinvested. They thought an outcome would be what that outcome is. Fair market decided, because other things have changed, right, that it's no longer that price point, and now they're there stuck holding the issue at hand, which is they have a surplus amount of inventory that basically they won't even be able to break even on. They're going to be losing money, right? So yes, 100%, a developer in the fair market has to take 100% responsibility for the decisions they make, the properties they buy, the things they do. Now, it's also the government's fault though, because both for the influx of money, for the whole idea of 2021 happening, based on regulations, based on a lot of the scare tactics and things that happened during that time period, how we didn't regulate inflation at that particular time. And I know you guys may think Bank of Canada is a little bit different than the country itself, and yeah, technically it is, but the governance all runs from one person, one system, one Canada, right? So I'm going to say that 100% the government is involved and has partial blame on all of this. And I'm going to say at all levels, the fact that there's so much red tape that developers could not bring property on. When we talk about or properties through the process within a reasonable time frame, when we talk about affordable housing, when up to 35 to 40% of a unit's end price has 35 to 40%, so let's say $1 million condo, when you take out all the CAC, DCC fees, taxation, on all the different levels, it could be up to 30 to 35% of that total home's price. So a $1 million condo, really $300,000 to $350,000 of that could be taxes depending on the municipality. So when we talk about affordability, really, if that end user could come to the market at 650 grand, now I'm not saying there doesn't have to be taxes. Of course there has to be taxes. Of course there has to be things done. But does 35% or 30%, does 350,000 out of that $1 million cost of that condo have to be taxes? I don't think so. And on top of that, why does it take a year, 2 years, 3 years, 4 years, 5 years to run through the municipality? Why don't we have set and zone places and things thought through that we can allow these developers? Because what we have to remember is these developers, every dollar they spend is going to be put back to the consumer. Like anything, I'm gonna grab an energy drink. Every dollar that they spent to make this energy drink is going to be brought back onto me, plus a portion for profit, right? So all of these costs borne by the developer, including time, which is huge. If you own a property for $20 million, none of them are buying it cash. They have $15 million in financing. If it takes 2 years to run it through that process, or sometimes 4, 5, 6 years to run it through that process, at 10% a year on $20 million is $2 million a year. So by the time they're just able to sell it, not even break ground and start selling, there's $4 million in extra interest cost burdened to the developer, which is then going to go back to the consumer. So who's to blame? Everybody, more or less. A lot of it was just jumping to the gun, overbuilding, overselling, and not really thinking of the future long term, just thinking about profits today and votes tomorrow. That's basically what it's been. Now back to this story, because that was just the back portion of it. Back to this story. So yes, in my opinion, this is 150% a bailout. And the reason why I say this is they say they're going to be buying properties that are just in foreclosure. So I've heard multiple different things. I've seen Carney speak, I've seen Ebby speak. They say the same thing, then they say completely different things. So it's really hard to keep track of exactly what's going on. And to be clear, nobody knows exactly what's going on. I just saw the minister in charge of taking care of all of these, and her exact words are, we're working through it. So they don't know who they're bailing out yet. They don't know which units they're buying. They don't know how much they're paying for. But Carney's exact words are, it's like, these guys do not want to lose money. The developers do not want to lose money on it. So we're going to come in here and buy these affordable units. Then obviously that's been backtracked through Ebby and so on and so forth. But what actually happens is still to be seen. That being said, what is the upside of this? Because I'm going to take both sides. And just to be clear, I genuinely think this is a buyout. I think there's a better way to do these things, or bailout. I do not agree with what's going forward, but let's look at the benefits, okay? So the benefits of this is potentially saving hundreds, if not thousands of jobs in that building sector. These developers are literally months, if not years away from going bankrupt because of these buildings. And they all have hundreds, if not thousands of employees. So that is one benefit. The other benefit is affordable housing. So apparently they're only putting in roughly under $300 million of actual taxpayers' money. The rest is going to be a mortgage too. So they're saying this is net positive or not, or net neutral. The reality is the taxpayers are paying it one way or another. And if it's affordable housing, the developers, as per what they've said, are not going to be losing money. And they're only buying places that are in foreclosure. But the reality is a lot of these are going to, not all 2,200 units are in foreclosure. Not all units that they said they're going to be buying are going to be in foreclosure. So it'd be interesting to see which developers they buy or which buildings they buy. How can they make them profitable to us at the end of the day, the taxpayer, and still be affordable housing? How can they break even so it's not costing us year after year to manage and maintain these buildings? Are they going to be selling them, or are they going to be condo or apartment use only? There's many questions to be asked. The only real upside that I see is the potential of saving these jobs. The downside is it doesn't allow the free market to act the way it's supposed to. Obviously, in downturns, if the company isn't positioned properly and extended themselves, then that's on the company. And unfortunately, yeah, People will lose their jobs and bad things will happen. But that's what happens with any company. You start a company, you start working for somebody that owns a company and they make bad decisions, that's what happens. So is it up to the taxpayers to pay for bad decisions? And are those CEOs, those owners, those people that actually own these companies, how much are they going to be losing? Are they personally going bankrupt because of this? Probably not, right? My personal opinion is this is probably the wrong way to do it. There's ways that we could have subsidized things, given these lenders low interest loans to carry over for time periods, things like that, versus just buying up all their inventory. I think there was a lot of different methods that wasn't thought through properly. I would like to see which developer they choose and what campaign contributions have they given in the past. I don't mean to be a guy with the tinfoil hat, but the reality is we need to look at all these things to make sure it's best for what the people are looking for and what returns we're getting back. Because as of right now, most people I talk to on all sides of the fence look at this as some sort of bailout or another. Now, on the affordable housing side, what is considered affordable housing? A lot of the units that are in foreclosure, a lot of the towers that are coming up that can't sold, these were sold at $2,000 a square foot. So what are they going to sell it for now? What are they buying it for? Even if they bought it for $1,500 a square foot and they're losing a little bit, how are they going to be, for $1,500 a square foot, 1,000 square foot unit, 2-bedroom, still $1.5 million. So how do you create affordable housing with a $1.5 million home? That's the question that you guys need to be asking. That's the question that I'm asking. So if these are going to be purpose-built rental buildings now, they're going to convert them to the whole tower. That tower is already built at a $2,000 a square foot sellable price point, right? So that developer, I can guarantee you, is probably at $2,000 a square foot. It's probably at that $1,700 a square foot cost, give or take, because margins usually are anywhere between 10 to 20%, right? So if they're going to be losing money and buying it at $1,500 a square foot at a $1.5 million purchase, right? Just a mortgage alone on that would be about $7,000 a month. So what are they going to do? Rent these out for 7 to 10 grand a month? That's affordable housing? So a lot of it's still to be determined. I'm interested to see. Put your comments below. Agree with me, disagree with me. I would love to see what you guys think about this. I can tell you personally, we had just shy of 800 units under contract coming to market this year and next. Now we have roughly about 160, 150, and we're picking developers that 100% we can count on and know are going to complete. We're choosing smaller projects throughout British Columbia between 10 to 30 units. We personally aren't getting involved in any more condo units for the time being because we don't want to, we've already been a part of a condo building that we sold out almost 50% of the units, and all of them got their deposits back because they couldn't complete on it. They couldn't come up with enough money. They needed extra sales. Price per square foot, which started at almost $900, dropped to about $700. It just no longer made sense. So now that property is for sale. So for us as a business, and when we represent our clients, we're looking at projects that we know are going to be or already completed, are already priced in, bought at the right time, because really in this market right now, there's so many scary points in it. Not only when we talk about this buyout of these units, but when things go into foreclosure, you also have to remember a lot of the warranties become invalid and void unless the next developer takes that up, right? So there's a whole bunch of hidden issues and potential problems down the line with a lot of these units that weren't maybe finished correctly because of budget constraints or whatever. So it's interesting to see what's going to happen within the next couple of years. Personally, even though we do project marketing and we represent our developers and we sell their units, we are 100% focused on a specific niche. If a client comes to me and says, I want a pre-sale, especially a pre-sale condo in the Greater Vancouver area or Fraser Valley, unless it's already built or close to it, I know and trust the developer, I know the CEO, I know for sure that the pricing is already in range with what it should be today, and they're going to be completing, I just always recommend my client, unless it hits those exact specifics, I recommend my clients always just go buy resale, because you can buy 1 or 2 year old already completed homes for great pricing, and the market really allows for that right now. So anyways, I'd love to hear more. I'm gonna do more of these talking heads about the market and just my insights. Like I said, this is 100% my opinion. I'd love to hear your opinion on it. Please comment below, share it, follow, and I'll see you guys next time.